Hello and welcome to TA for Traders. It is Friday the 15th of December. In this video we're going to run through the charts on all the asset classes to see where the momentum, money flow and sentiments have been over the last week. Let's look at those charts. Okay, starting with interest rates first of all. Obviously we've had a rise in the US base interest rates from the Fed during the week. This is the 10-year US government bond yield. You can see it fell on the announcement and has stayed at lower levels, finding some support from those moving averages, but they are rolling over. If it moves lower, I would expect it to go down and maybe even go below the 200-day moving average, which is still tracking down at the 2.3 level. But it's in a trade range situation, but getting towards the lower boundary. On European interest rates, looking at the German 10-year yield, you can see it's moved lower. Got the moving averages tracking down, pushing it lower. We've had the 50 cross the 200 week earlier in the week on Monday. That's a bearish sign, and one would expect this yield to go lower. In the UK, obviously the Brexit negotiations have continued. We had agreements at the end of last week. A vote went against Theresa May during the week from the government, but that hasn't stopped this from going lower. We've gone below the 200-week moving average on this. This is the 10-year government bond yield, and it's now towards the lower boundary of its trading range, of its downtrend, showing negative momentum. Maybe it could have a short-term bounce back up towards that 200-day, but really it looks like it's going to continue going lower. Moving on to currencies, this is the dollar index chart. You can see that on the rise in interest rates, the dollar came under some weakness, did bounce back yesterday. Today it's range trading. It's caught between the 20 and the 50-day moving average. We're getting this pincer formation between the two. That won't continue for long. It will break in one of the directions. Let's wait and see. Hard to tell at the moment which way it'll break because momentum is just neutral. RSI at 48.76 and the moving MACD, tracking around the 0 level. Last week the Aussie dollar came under some severe weakness. This week it's bounced. I did a video on that last week. Please look at that. This bounce was expected. Perhaps it's gone further than expected, right up above the resistance of the 50-day, and actually it's made the 200 move back up. If we can get above there, 0.7691, that could actually continue the momentum upwards, but this 50 is still a fact as it tracks down. Really I would expect a pincer between the 50 and 20 and for a move back down towards the 20 at 75.87. Obviously the rise on the Aussie dollar has taken the momentum into positive territory, and that's shown by the RSI at 58.17 and the short term moving above the longer term MACD. Euro against the dollar has just really range traded. Again, it's between the 20 and the 50, and the pound against the dollar did benefit during the week, but has come off today, so a range trading week there as well. It seems to be trading around the 20-day moving average, which is moving up and giving support, and below there we have got the 50 rising as well. But you can see this range trading is sucking the momentum, upside momentum, out of the index. RSI out of the pound, RSI now 51.99, and those MACD are tracking down. Finally, on the currencies, have to have a look at Bitcoin. This is from the Bitstamp exchange. It's having a good day today. Has range traded through the week. Not a lot you can say. RSI hasn't reached a peak, so perhaps a non-confirmation. And as I said last week, we are overextended from these moving averages. Moving on to commodity markets. Oil's been quite quiet this week. All the news has really been on the gas price after that Austrian explosion, but the oil price did benefit from that yesterday somewhat, taking it back up to the 20-day, trading around this 20-day, presently below it, but trading around, and it still is moving up. So this could still be a flag in the bull trend, but it is losing momentum as this consolidation phase continues. RSI 53.25. On the gold, that's had a slight bounce this week. Why it sold off last week, I'm sure that was related to Bitcoin. A bounce this week despite Bitcoin continuing upwards, bouncing from oversold levels. It could go further. Momentum is still negative, but has increased and it's broken the downtrend. And then on copper, I've done a video today on copper, so you get a full view on that if you look at the whole video. But we're bouncing into resistance, remaining this downtrend, which could be a flag on the longer term picture, but we do need the upside momentum to continue. And finally, moving on to indices, the S&P 500, a bit of a wobbly day yesterday, Thursday, picking up in early trade, pre-trade today, still above the moving averages, still in a solid uptrend. The RSI didn't quite reach a peak, so perhaps a slight non-confirmation there. But you still stick with it whilst we're still above the moving average, especially the 20 moving average, and in this uptrend. On the DAX, I've done a video on that today, so you can look at that. Could be a head and shoulder. Slight concern that we're below the moving averages, and we've got this rolling formation with negative momentum, so keep your eye on that one. And finally, the UK FTSE 100 had a reasonable week, well, from Friday through to Tuesday. A bit of a consolidation since then. It is above the moving averages, holding around the 50, which is tracking down, but we are about to get a golden cross early next week on the 20, crossing the 200. Momentum still is okay-ish. RSI 55.98, but remember, we are bouncing to this level of resistance, and to me still looks like a very much a market that is range trading between 76 and 7200. So that's been TA for traders, looking at the sentiment and money flows in the market. I hope you found the video of interest. Please remember, the videos I do on YouTube are for information only, and they're not an investment recommendation. I'll see you next week.